This concept is more caught than it is taught, and adults take longer to internalize that. When we get a loan request, our attorney is the individual who receives the loan proceeds, not the borrower. We want to keep that activity of borrowing and repaying within the family. Why would we want to do that? Because we get to reset up a global payment system and we auto debit the loan repayments out of our family members' accounts on a monthly basis.
How much did that cost to set up? Let's just say you have $100 in this pool. You and Rebecca own 80% of that. Other family members are 20%. Is it fair to say that that would get distributed based on the percentage you have in that entity?
Can you walk me through identifying all the disadvantages of having that financial energy flowing back to the family's money pool versus away?
Hey, you're not going to like my answer, J-Lo. Jayson Lowe, welcome back to the BetterWealth Show.
Thank you for having me back. It's a pleasure to be here.
We stirred the pot together. A little over a month ago, we dropped a video, and it's got 11,000 views in 1 month and counting. And we got so much good feedback. I mean, I say we stirred the pot because you said some pretty controversial things. And yet I was amazed by the amount of people leaning in and the amount of questions that we got. And I say that tongue in cheek because I knew when we were recording, this was going to inspire so many people, get people to think differently.
Yeah.
Talking about the one strike rule, talking about the 77 policies that you guys have as a family and the system. And so what I would love for this episode is for us to go deeper
Sure.
and in a conversation, just go deeper in how the logistics, how the system, I love the word framework, like go deeper in that. And I will just say, if you're watching this and you're like, okay, this sounds like a really interesting topic, and you've not watched our original video, it will be in the description, and you can just, type Jayson Lowe, BetterWealth, and our video will pop up. And it's a phenomenal watch. Watch that first. And then this is really the part 2 to our sit down in-person interview that we did in Nashville, Tennessee. So without further ado, what was some of the feedback you got from our conversation?
I think the common theme that I saw in the comments and people who just Facebook messaged me, reached out to me to say that the family banking method is really, really resonating, and it's all about the how. That's where all the curiosity is. And people loved the clarity on what the process of becoming your own banker is, what it isn't, the mechanics and some of the attributes of the tool that's used to implement the process, really demystifying a lot of that. I remind myself every single time I'm on one of these shows that all progress begins with speaking the truth. And the message just doesn't need to be sensationalized. And so I think we covered a lot of really good ground on that, and I'm very, very grateful. But the feedback was phenomenal. The common pattern was around family banking and people's genuine curiosity as to how my family has been doing this. We're entering our 18th year, and I will never forget when R. Nelson Nash pointed out in his book, the book I'm referencing is Becoming Your Own Banker. And he said, it's going to take the average person 20 years to get the bankers out of their lives. And boy, what a peaceful, stress-free way of life that is. I'm a bit of an overachiever. We got there in 13, and we don't rely upon a conventional bank for anything other than the convenience of debit. And so what I can do, if it's helpful for you and your viewers, I'll walk through the framework and maybe put it into a construct that triggers a lot of good clarifying questions, because I think the questions, Caleb, that come up for you, they'll be the best answers for your audience.
Yeah.
And so what we did many years ago, as Rebecca and I and our 4 children, as we were practicing this process, I never brought it up at our Sunday family dinners. We have our whole family together every Sunday that I'm in town. We've been doing that since April of 2008. And I've never brought up the concept. And so finally, at one of our Thanksgiving meals, a family member said, I'm a little curious. You keep describing how you're controlling how you're financing the things within the family. Can you expand a little bit and share what that means?" That was the door that opened that I felt comfortable bringing it up. We had the whole family there, and I'm this is the domino that tipped over. I said, "Well, I'd be happy to share how we do this, Rebecca and I, on 2 conditions. 1, you have to permit me give me the opportunity to coach you on how to do this for you. And 2, whenever you need a new vehicle, you wanna consolidate some debt, you want to refinance some debt, that you look to shop at home, meaning sitting down with me, before you have conversation or explore options with someone else's bank or some other finance company. Now, you're not going to understand the why in terms of why it matters, but I would just ask you, give me the courtesy of the conversation first. So that at a level where I was able to meet the rest of my family where they were at. I didn't go into any what is the infinite banking concept? What is the tool that's used to implement it? Why it represents an advantage? And I didn't.
You didn't do the equipment financing,
No,
combo
no,
right then and there with your family? Okay.
no. So it just was completely unnecessary. So
Yes.
my sister-in-law was the very first person in the family to say, I would love to take you up on that offer. That led to us taking over the financing arrangement that she had in place with an external finance company on her vehicle, refinancing some credit card debt. We matched her existing payments that she was otherwise transferring away. So nothing changed from a cash flow perspective for her. What we did is we adjusted the amortization schedule so that we could recapture the interest that would have otherwise been paid to those external finance companies and credit card companies. We made a pact as a family in that moment that we would replicate what Nelson did in the way of how much interest he would charge when family members would shop at home, when they would finance things within the family's banking system. And that interest rate was 10%. Everyone asks me, why 10%? My response is always the same. That's what Nelson responded when I asked him, what interest rate are you applying to family members who are borrowing capital? And he said 10%. I said, great, I'm going to mirror that. And that's exactly what we did. The process was set up very similar to if you think of how a real estate transaction gets reconciled and completed. Our family attorney, who's been with us since the inception of me being an entrepreneur, our family attorney drafted a loan document, and that loan document spells out what you would typically find in any standard loan document and the interest rate, the amortization schedule that we've agreed upon, et cetera. A family member approaches and says, look, I really would like to borrow some capital from the family banking system to purchase a car. We work out the payment based on what's comfortable and affordable for the borrower. This may shock you. We ran credit checks on any family member that wanted to borrow from the family banking system. I am not kidding you. Because this is a business. You recall in the first episode, this is a business. And so we structure and organize it like a business. And so provided the credit check comes back clean and we know that we've got a good.
For you, is it, we either loan you money or not? It's not like you change the interest rate based on their credit score.
It's more of a conversation because in one instance, a family member's marriage was ending, and there was some financial difficulty there, and so we were able to. It was actually the credit score that opened up a gateway for an even bigger conversation to say, look, we understand we want to finance this particular product that you want to buy, but I think we can solve a bigger problem here. And that was a result of just open, honest conversation. All progress begins with telling the truth. And so when we get a loan request and the conversation happens, the credit check happens, everything looks fine, then our attorney is the individual who receives the loan proceeds. not the borrower. Our family attorney meets with the borrower. I'm not present in that meeting. Rebecca's not present in that meeting. Our attorney meets with the borrower to walk through the loan agreement so that it can be attested to that the loan agreement was reviewed by an attorney and that everybody agreed and everybody knew, and there's no possibility of, you didn't explain that to me, I didn't know that I had to repay a loan, or anything that could come up, right? And then the funds move from the attorney to the borrower. Now, our uh, volume of borrowing in the family, as you can imagine, over these 17 years now going into our 18th year, has increased substantially. And we got to the point where we set up a global payment system and we auto debit the loan repayments out of our family members' accounts on a monthly basis, no different than if they were accustomed to dealing with
How much
someone
did that
else's
cost
bank.
to set up? Was it tough to set
Um,
up, or was it
that would be a great question for Rebecca. We should have her on the show. She could walk through how she put that together. Credit to Rebecca, my wife. She's incredible. She is one of the most organized human beings I think I've ever met in my life. And she did a wonderful job getting that structure put into place, because you can imagine when you're getting checks and it's like, oh my goodness, this is all manual. Certainly there's got to be a better way. And you're getting email money transfers. And she said, okay, that's enough. Like the volume would just grew to the point where,
you mean you're not getting Zelled and Venmo'd,
oh
your
my
payments
God,
that
Caleb, it was just hilarious when she would say to me, like, look at this, look at what I'm having to deal with. And I said, oh my goodness, manual became unmanageable. And so now with this global payment system, it is remarkably simple. Our kids, now when I say our kids, I also refer to my nieces, my nephews. Most recently, my niece began her college education. She is gainfully employed on a part time basis, incredibly responsible young lady. Her name's Emily, and she wanted a vehicle, and she knew exactly what the framework was in advance. She created a time to meet. That is done through my executive assistant, Lana. It wasn't knocking on the door saying, Uncle, can I hop in and have a conversation with you? We run this like a business, and sat down, worked out the loan arrangement, and she ended up getting a Nissan, a little Nissan vehicle, and it's a safe, reliable car, and all the money that she repays, if she's a responsible borrower, because remember the four characters in the financial play, right? We have the depositor, the borrower, the banker, the bank owner. If she's a responsible borrower, then she gets to continue to be a responsible borrower. She will always have ready access to capital, not just for things that would be in the category of necessity, but things that would also be in the category of a high caliber opportunity. Look at what's going on with AI and all these amazing opportunities that are just on the horizon for these young adults that are going to create wonderful businesses and produce a lot of value. Well, we've got ready access capital so that these high caliber opportunities can be taken advantage of. And so the essence of this, the simplicity of this, is that everyone has to have clarity within the family on why this matters. We're not just an alternate lender. It doesn't start and stop there. You may recall, I don't know if this was part of your upbringing. I know for certain it was part of mine. The language was one day you're going to grow up and you're going to move out and you're going to start your own family, and you will have your own liabilities, your own bills. You will have to manage money in, money out. You're going to learn financial responsibility, and you will be tasked with that because you will have your own family. The wealthy don't talk that way. The wealthy circle the wagons around the family to say the loans, the mortgages, the car loans, all of it. We want to keep that activity of borrowing and repaying within the family. Why would we want to do that? Because we get to reaccess everything we repay if we are truly recapturing interest, which is paying more premium. We're growing the size of the money pool. And the alternative is to transfer all that financial energy away from the family. And so when I met with my family to begin coaching them through this, I tapped into logic, Caleb.
Yeah, sometimes that's lacking in
Oh my
this.
goodness. So without
Yeah.
anyone having read this book in the family, I was asking logical questions. If there was an opportunity to shop at home, meaning you could borrow capital no differently than you would borrow it from an external finance company or someone else's bank, with the exception of the fact that we can get that lending activity done much faster. We can we can negotiate a payment that's comfortable and affordable. We can negotiate an amortization schedule. Can you walk me through identifying all the disadvantages of having that financial energy flowing back to the family's money pool versus away?
Yeah, you're not gonna like my answer, J-Lo.
That's okay.
The
So
the only
family.
the only the only quote unquote disadvantage, and this is thinking short term, 'cause not long term because of
Yeah.
the dynasty that you're building, would be if me as a consumer am paying a 10% loan when I could get a 7% loan. um, you could say that me as the borrower, I could then recapture that 3% in, so that would be the only thing, and I don't think it's a big deal, but that would be the only answer that I would give. Outside of that, there's no downside. I do have a couple other follow-up questions on your end, but that would be the only downside that I would have. And again, um, you're not gonna live forever. What's gonna happen to when you pass away? So as a kid, you're it's not just like you have to think multiple generations, and so them by doing this system are going to benefit greatly. Now, someone that's not your kids, I don't know how that arrangement works. But that would just be my response.
Thank you. And you can attest. So I didn't preempt you with this question before we started recording today. So you're going to get, for those who are watching and listening, you're going to get similar responses from your family. And if you're practicing this process in your own life, and you can have the conversation to say, okay, that's an interesting perspective. So if we now get to a point where we factor in, because people ask us all the time, right? Why would I borrow at 6.5, 8% when I can borrow from Wells Fargo at 3? And that is, as you and I know, it's a fatal error in thinking as it relates to this process. Nobody is really reckoning with lost opportunity cost. People talk about it, but very few people actually reckon with it. And when the family sees and understands that the amortization schedule is completely 100% negotiable. I'm not presenting that to you to say, Caleb, you've got to repay this loan within 36 months. And so all of the flexibility, that peaceful, stress-free way of life, and recognizing that that extra interest is not really extra interest, it's more premium that creates more capital that
Prepaying.
it enables the family to shop more at home. And that is not,
You you know
that's not internalized overnight.
It's interesting, even when you were speaking earlier, when you were talking about your niece and, like, the benefit she gets, it's amazing how our brains work. Because I immediately went to, like, "Oh, Jason gives her the interest as, like, a birthday gift," and you said that the gift that she gets is the ability to borrow in the future, and
That's right.
I love that because it's like, it just tells you how, like, our default,
Yeah.
it's like how people are thinking, and I wonder if anyone caught that, because I just was like, "That's I love that," and
Well,
and
thank
yet
you.
and yet, if you put a pop quiz and I would have said, "Oh, J-Lo takes the difference and, passes it on to them as a being like a good steward," but that's not a sustainable system, because then you as a banking system are not profitable, and you might be helping them that year, but are you really helping them 60 years from now with the banking system? So it's just an interesting thought experiment in itself.
Yeah, well, thank you for that, for sharing your thinking. What I find amazing is that our children and my nieces and nephews, given that this is all that they've ever been exposed to, right? Because we have all written a story. We have a story that's wired in our minds, and when people first see, particularly adults, when they first see the infinite banking concept, if they catch it, they have to begin rewriting that story of what they have been doing financially without questioning it.
Yep.
It's just what they've been taught to do. And with the kids are like, "Yeah, this makes perfect sense. We would shop at home, get it,
Right.
and looking ahead into the bigger future, I can see what that might look like for me, and I get that." And adults take longer to internalize that, and particularly as it relates to rates. So when you're setting up your family banking framework, you should expect that you're going to receive some very interesting perspectives on rates. And then you just have to be able to meet your family member where they're at. It doesn't become what's right, what's wrong, um, your thinking versus my thinking. We just take a crash course in logic,
Mhm.
and let's see where the path of logic leads us to in terms of the advantages of expanding the family's money pool, being able to shop more at home versus not. And for some not all of my family members participate in our family banking system. And I say that honestly. It's not the entire family. Some family members have just chosen to sit in the sidelines, and I do not do anything other than remind everyone in the family the invitation to participate has no expiration date,
Yeah, that's good.
because this concept is more caught than it is taught.
Yeah.
And but once family members catch it, and typically more family members lean in
Yeah.
at our annual family banking meeting, which our next one is coming up. We have a cruise as a family that we're taking over the Christmas break, and um, that's courtesy of the life insurance company's capital,
Okay.
courtesy of the policy loan provision, and
So,
so we.
just to be clear, I'm just curious how you do this. Does your family members pay for that, or is it part of them being members of the family bank where they get a free cruise? Like, who's paying for this cruise? Is it your
Thank you for
company?
asking that. Thanks for asking that. So, yes, it's my not my company, in the sense that it's just mine, but we have 14 companies in our family group of businesses, and all of those companies um, create a divisible surplus, and I'm compensated extremely well. I'm blessed beyond the definition of good fortune, and so what we do as a family. This may just be trivia for your audience, but I hope that maybe it serves as inspiration for some folks. But every gross dollar that we receive in our hands as a family, 15 cents of that gross dollar is used to bless someone else's life in a positive way. That's the number. It's been that way for as long as we've been blessed with abundance, and it will always be that way. And then I take a modest salary from my group of companies, and we use some of the divisible surplus to take the family on holiday. And
Nice. So
I
that's a
have a
perk. That's a perk.
well,
That
it's a big
that
perk
that's a
because
perk of doing business. Like, you do business that I might pay an extra percent or 2 to, there's some things that are you can't measure everything with rates, you know?
100%. And again, we're blessed with abundance.
Yeah.
Our group of companies generates multi eight figures of revenue, all profitable. And where I'm going with that is I have a fear of loss. Both my parents passed away prematurely. My parents never met my children, never met my wife, never met my extended family. I want my family close to me. And I had always dreamt that if I was in a position of financial abundance, because I certainly didn't come from that I would, at minimum, be with my family on a holiday to create memories. And that would happen once a year, and I would take care of it. And I've honored that commitment, and I will continue to honor that commitment.
It's awesome.
And, it's not a small group, like, we you know, we got, like, 22 people coming on this thing in, over the Christmas break, and but you know what? It's amazing because when we do our family banking meeting, it takes us roughly 90 minutes, so it's not an entire day diving deep, it's a 90-minute meeting, and the framework is, very consistent in terms of we recognize borrowers from the family banking system and that, our loans are performing, right? So we're getting repayment, everybody is treating it like a business. We honor the kids for some of their accomplishments in, because we have some of the kids now who are starting their own policies, and so that's gonna be celebrated here in, December, and so we're super pumped about that, and then we just have discussion. We refer to a particular element of Nelson's book. Nelson is always a part of our family banking meetings without exception. We express gratitude to him. Everyone in the family comments and remarks something that they're grateful for, as it relates to Nelson. Now, looking looking upon that from heaven, I can tell you that Nelson is cringing when that happens because he told me a couple of weeks before he passed, we had a wonderful conversation, and he said, "I want you to remember something. This is about the message, not the man." He did not want to be, pedestaled or, um, looked upon as a, some visionary figure, and, so I know that he's not, not necessarily pleased with that, but as a family, it's just our way of just expressing a token of gratitude to him, and it gets our frame of mind established to look inside becoming your own banker because he told us repeatedly. Nelson had occasion to meet my oldest son and my oldest daughter. He didn't have occasion to meet my twins, but he would tell us, he would say, the more you see infinite banking concepts, the more you'll see you didn't see. And so every time that we go into the book, when one of the kids reflects on a chapter, I think the last one that we did was the grocery store. And when one of the kids says something where you're like, "Oh my goodness, I didn't even how did I not see that the last 25 times that I read the book?" And so he didn't just mean that it was you that would see something that you didn't see. Somebody else could help you see something that you didn't see. And, yeah, and I gotta tell you this. This is awesome, Caleb. You're gonna love this because you and I love to market, right? We love marketing. So we do family banking T-shirts for every annual meeting, and what the kids do is when they're going out to, where people would put a towel down on a chair next to a pool, they bring and I asked them to do this. I said, "Bring your family banking T-shirts and put them on the chairs around the pool." So there's like 20 plus of these T-shirts, and people, I'm not kidding, people approach and they say, "Oh, I'm quite curious, family banking, what is that exactly? Because I see all the kids, they were wearing these shirts and now they're on the chairs, and help me understand what this is all about." And I always, without fail, I just ask a simple question because this comes with me everywhere. And
But
I
you
just
stick you stuff it in your back pocket or how
yeah,
what's the
so
logistic?
this is the actual copy. You can see how it's like tattered and bound, and it's with me. So if I'm out, by the pool and just watching the kids and stuff, I'm reading and I'm just relaxing. So I'll just ask the person who makes mention of the shirt. I'll say, "Oh, I'm just genuinely curious. Have you read this book?" And the answer is,
No.
"How long would it take you to get through 92 pages?" "It took me a couple of hours. How long would it take you?" And it doesn't matter to me where they buy the book from. Open up your phone, pop up your Amazon link, get a copy. It'll be waiting for you when you get off the boat. And you never know what kind of domino that's gonna tip over
Wow.
in someone's life.
Yeah,
Isn't that good? And then the kids are like, "Oh, good one, dad. Nice."
I love it. There's so many things. Let me do some rapid fire
Yeah,
questions.
yeah, go ahead.
Um,
Shoot.
as your kids get their banking policies,
Yeah.
do they do they go to their banking policy first if there's enough capital to use, or do they go to how does that all work? If you're a high income earner or own a successful business, you're already creating real value in the world. The real question is, are you keeping that money, protecting it, and growing it the way that actually supports your long term goals? At BetterWealth, we help people like you better keep, protect, and grow their wealth through various tax strategies, estate planning, specially designed life insurance, retirement planning, and even a fractional family office service. If you're interested in one or more of the areas we can serve and want to learn more, the next step is to book a free clarity call with us. Click the link in the description or tag comment below to get started. Back to the video.
While it's so fresh with, 2 of the kids that are starting up their policies, so there's no capital to access from theirs yet. I've owned policies on all the kids' lives since they were born, and so we are utilizing the policies where they are the lives insured, but, Rebecca and I own them. And then once they've got some flywheel momentum in terms of cash value accumulation in the ones that they crank up, then the answer is absolutely yes, hands down. We're gonna
They
use theirs.
would they use theirs, but would it be the same system? Would they still give
100%. Yep,
the attorney and all, and then
100%.
10%, it just
Yep,
would be instead
yep.
of going into your ACH pool, it would be going back into their like, they'd be paying the insurance company.
No, so almost. So their policies will form a part of the consolidated Low family banking system. What they're doing is they're adding more branches.
I see.
And they have ownership interest in those branches. And they're pledging their cash value as additional capital for the family's money pool. And so wherever possible, we are absolutely going to utilize their policies.
I see, and so, for example, I'm just making simple numbers here. Let's just say you have, $100 in this pool,
Yeah,
and 50% of it is loaned out and is making it's an asset making 10%.
yeah,
To make it simple, then let's say that portfolio did 5% because half of it was loaned out at 10, the other will you get what we're not talking about dividend, we're just making this simple. Is it fair to say that every person, like, that would get distributed based on the percentage you have in that entity?
yes, but in addition to that, it's if you think of the cash value as share capital.
Correct, yeah, that's actually really it's logical, right?
Well, that's
Like,
exactly how I coach them on it.
yeah.
Your cash
So
value,
if you
share
had
capital.
95% of the shared, so you would own 95% of you'd get 95% of the profits of the loans that
Allocated
were
back.
created.
Precisely. And in addition to that, the reason, even from such an early age, that we're coaching the kids, we don't remember what I said earlier, what my parents said. Someday you're going to grow up and start your own family. You're going to have your own bills, your own liabilities, etc. I do not want the kids developing the notion that they're going to start their own policies and then go operate in silos. That's the equivalent of not circling the wagons around the family.
Yeah,
This is a business. Your cash value is share capital as part of the family banking business. That's why it's called family banking. You will always be a part of the family. And so these policies are part of the consolidated system of 77, soon to be 79 policies that make up the family banking system. And the kids grasp that.
yeah,
They understand it because they haven't had a story written in their mind of anything other than that.
yeah. Lo, I logistically though, you're so let's take the example I just used and said, pool of capital, and let's say you and Rebecca own 80% of that,
Yeah,
and then other family members that are part of that are 20%. I'm sure the ratio is different, but let's just
it
say
is.
that's the case. And how pr- do you, do the premiums just get paid fully? You are you so you're paying premiums,
Mhm.
and then as loans are I guess where I'm struggling right now is I don't know how I guess it doesn't necessarily matter what policies you take the loans against, because if it's all in the pool, it doesn't really matter.
That's right.
And then you as the policy owner are responsible for funding the policy, and so that I think I just answered my question. I don't know if there's because the additional money that's going. Okay, here's my question. So let's say the policy loan, to make math simple, is 5%
Yep.
and you're charging 10.
Yep.
That additional 5%, it's going to put into more premiums.
Into whatever policies will hold it, because we track each individual loan. So we use a loan management, basically software tracker that, credit to John McPhee. I don't know if he listens to the show, but
Shout
we've
out,
been u
John. Yeah.
yeah, we've been using his tracker since he built it.
Do you get my question though? Is like, is it evenly distributed from a standpoint of, let's say the extra company earns an additional $100,000 of like profit, and I am 20% of this entity.
Mhm.
Is it reasonable for me to say like, hey, even if my policy doesn't have quote unquote any room, could I take 20 grand and start another policy?
The answer would be yes. No family member has asked that yet, if
Okay.
I'm
Okay.
being
I'm maybe getting more. I'm just like legit. Like this is where I'm really grateful for you opening up behind the scenes, because it's like really inspiring, really cool. And then my Kobe of 7 fact finder
I'm an 8.
has you're an
I
8.
I sure am. Yeah.
That's awesome. All right, what's your quick start?
My quick start's 5.
Okay. We're
So
very
if I'm
similar. We're very similar.
Yeah, if I have enough information, then my high quick start activates because I've got enough information to activate. But
Mhm.
if I don't have enough information, then my fact find takes center stage.
With the few minutes we have left, how many loans do you guys approve, out of the loan requests from families? Is it 100%, 80%, 40%? Do you have a percentage of
Yeah, I would
approvals?
say, if I could give you the most accurate number, it would be somewhere in the 97% range. The only reason why I say that is because, even though we've shared with family repeatedly, we do not lend unsecured. And so if you're using the proceeds for something that cannot be secured, then you're certainly welcome to pledge collateral in lieu of whatever it is you're using the proceeds for. And most recently, we had a family member who had requested, um, what would be an unsecured loan, and there wasn't, sufficient collateral to provide in lieu of that, and so we respectfully declined and just reminded that family member, like, that is,
Yeah, that's the standard.
you may recall, like, and there was no, to my knowledge, I mean, there's been no animosity or anything toward that, but again, we're running it like a business, and I'm not suggesting that's the only way to do it. I mean, anybody out there who's, implementing the framework to some degree, you have to set standards that apply to your family, your family's dynamic, but not overlook the fundamental practice of lending from institutions that do it extremely well and make a lot of money doing it.
Yeah.
Take a look at their best demonstrated practices around risk management and underwriting and mirror them.
Yeah.
That's what we've done.
Another thing that you say, and we'll ask 2 more questions and then land the plane here. What happens if one of your family members comes and they're young? What is it? What's the saying? Young, dumb, and, broke, right? Not broke, but they're young and dumb, and they wanna buy this sports car. They got the money, the collateral. Like, do you as a banker, when does a banker versus the dad or uncle hat? What are you just having the banker hat and you're like, "Okay, I'm gonna let you do this even though, you know, I at 20 years old would not make this decision." How do you navigate that? Estate planning is what ensures that everything you've worked for ends up with where it's supposed to be, with who it's supposed to be with. We've helped entrepreneurs, high income earners, and even retirees create multi generational legacy plans with trust, wills, guardianship documents, and more, all with unlimited revisions and no ongoing fees. If you want to get started with your estate plan, or you have an existing estate plan that you want us to review for you, then click the link in the description or tag comment below to learn more. Back to the video.
Well, if the borrower sufficiently meets the criteria, I'm okay with it. I think of my nephew. He's amazing. His name's Ethan. He's just a wonderful kid, and he got his first car at age 16, and he's turning 21, and he's been through 3 vehicles in the family banking system. He has been a perfect on-time borrower, like A plus track record. And one of the cars was it was this. It had to have been imported from overseas, where the driver's side was on the opposite side, and it was this souped up, car. And I just thought, oh boy, I don't know that. Obviously, I wouldn't buy that, but he was very responsible, and
Yep.
I got to tip my hat to him. And so,
Okay.
yeah, if the criteria is met, it doesn't matter to
And
me.
then my last question was in figuring out, you've said multiple times, like figuring out the loan arrangement.
Yeah,
Is it just one of those? Is it all around the amortization? Like if you meet the
yeah,
criteria, then it's just figuring out what payment would be responsible.
yeah, and it's got to be comfortable. It's got to be affordable.
Yeah. Okay.
And if it meets that criteria, then I'm comfortable. But if the borrower wants to commit more and I think it's maybe a little bit off base, then I'll coach to that to
Okay.
say, let's stretch the amortization out. And
Here's my ask. If you've been watching this and this has been valuable, let us know. Let us know other questions that you have. And then one thing that J Lo mentioned to me before we hit record is it'd be really cool if we did some type of live Q&A with our community, maybe your community as well. And so if you would be interested in something like that, please let us know in the comments. I'll have my email in the description. You can just shoot me an email as well. But if we have enough interest, J Lo, it'd be fun to do a live
oh,
Q&A
I
and
would
go
love that.
deeper. And I just want to thank you so much for your time, and really grateful for this casual conversation that went deeper. I think so many people are very much going to benefit from it. Grateful for you, and very much look forward to our next time together.
Yeah, likewise. Thanks again for having me.